Hey everybody, today we're going to talk about the stock market and where I see the stock market headed for the month of July. Before we begin, please read the disclaimer and pause the video as you read it. Okay, so a lot happened this month. Big news is that there was a war going on between Israel and Iran, and the U.S. recently, last weekend, launched ballistic attacks on their nuclear sites. So the idea is that Iran was feared to have they were basically enriching uranium, and people thought that well with this much enrichment, they're trying to build a nuclear weapon, right? Which is bad because obviously, we don't want nuclear weapons to go into the wrong hands, right? So I'm not trying to get political here or anything, but basically what happened was Israel and the president Trump coordinated attack to basically try to destroy the nuclear site. So they bombed 3 sites, and so that caused the market to dip a little bit. But over the weekend, the president, or the last few days, the president was able to broker a deal. So there's potentially a ceasefire right now. Now, of course, nothing is 100% set, and obviously there's a lot of beef between Israel and Iran. So they might end up firing rockets at each other. In fact, there was a report that they kept firing even after, but yeah, so nothing is 100% done yet, but for the most part, the market is believing that this conflict is over. So the whole dip that we've had this year with the DeepSeek in February to the tariff war in April, and now we had this fantastic V recovery, right? And we're also seeing interest rates, CPI inflation data come down, right? Although it did sneak up a little bit, which is fine. It's been going down for the past 3 months, right? From the beginning of the year to April, it went down. So seeing a small bounce is not that big of a deal. The next report is going to be, of course, in July. But yeah, the inflation, CPI inflation rate is looking pretty good overall. We want to see it come down towards 2%. And with that, the Fed will likely begin cutting rates, right? For now, they're just pausing. But we can see here. So yeah, now we're pretty much near all-time highs. I think the NASDAQ already hit all-time high. So again, we look at the, let's get a cleaner chart here. So we see this V recovery. It looks very similar to March 2020, right? The COVID crash and the 2022 great inflation. But this one took all year to recover. But this V recovery, very similar to 2020. And when we see it recover this quickly, it usually ends up continuing higher, right? So that's what I'm expecting. I'm expecting the month of July to be just price discovery, push up higher, right? Barring any sort of additional conflict in the Middle East, maybe they decided to not honor this ceasefire and they start attacking again, and Trump might have to be dragged into a longer, more prolonged war in there, so that might come down. We do have a gap down here. We actually have several gaps. Now, these aren't guaranteed to fill, but usually the short-term ones might fill. So we might see it come down a little bit, but I do think that the next month of July, we're going to see it build support before eventually pushing up higher to price discovery, right? Now, if you've been watching my videos consistently, you'll notice that I like to talk about potential tailwinds, right? Potential headwinds, because being like bullish bias is usually, you can get sort of sucked into this echo chamber. So it's good to challenge those bullish bias once in a while, right? So I've been talking about potential recession risk, right? We haven't had an official recession since COVID, right? And we've usually, when we see something I've talked about is the 10 and 2-year yield, right? When they go below zero, that means it's inverted. Now they're uninverting right now, or they have been uninverting since last year, right? So usually when we stay below for this long, we usually fall by recession. We haven't had an official recession on record yet. So, and I've been talking about how this recession might occur within either the second half of this year or 2026. I think 2026 is more likely. But again, we haven't had a recession in a while. And even in 2022, right, we had the great inflation spike, and the Fed had to raise rates to really dissipate that. And we didn't have an official recession, which is really strange, right? So people are talking about how we had this silent recession where we had the price increase for everything, cost of living went up, but we didn't have an official recession on record. So we might have an official recession somewhere down the line. Again, if you look at the track record of the yield curve uninverting, right, every single time it's followed by a recession. So just something to keep in mind, right, as we continue to push north towards new all-time highs, right? potential headwind, second one, right? When the Fed lowers rates, right? Which is something what we want, right? Usually when the Fed lowers the interest rates, that's good for stocks, right? But at the same time, whenever there's elevated rates followed by a decrease, when the Fed cuts, it's usually also followed by a recession every single time, right? So this, we haven't had one since COVID again, right? So this is just something, and you see how it's starting to move down, right? So that's just something I'm looking out for. Yield curve and uninversion and also the Fed cutting rates. So I do think that we'll probably get a recession on record within the next 18 months, somewhere down the line, right? But for now, I am pretty bullish on the stock market. Obviously, we had this incredible V recovery, which many people predicted, pretty much at the resistance area now. I'm going to be surprised if we came down to fill this gap over here, right? Maybe cut sideways, but as long as we hold 600 level-ish, or not 600, sorry, 590, 592, right? I think it'll eventually push up higher, and we'll see price discovery either by middle of to the end of next month, or maybe the month after in August, right? But I do see the year ending up higher, and of course we're going to have to look to see how the CPI data comes out in July 15th, and we'll definitely update you on the next report, and hopefully we see interest rates come down so we can finally see cuts, right? The Fed will cut, and that will probably push the market higher in the short term, right? Let's look at some other stuff. VIX coming down. It's already bounced, seeing a classic descending triangle pattern, hitting resistance multiple times before it breaks right down. So that's good, right? We're seeing less volatility. So this is usually a good sign that the market is going to move higher, right? See oil, of course, is spiked with the Middle East conflict, but now that there's a ceasefire, it basically came down. So overall it's good. Gold has been basically consolidating around this Fibonacci. Again, this is another reason why I like Fibonacci's. They tend to be good support and resistance areas, right? So you see how we've been basically moving sideways for the last 3 months, right? But this does look promising. You see we're making higher lows. So for gold, I do think that will eventually break up higher from this triangle, right? And lastly, we'll look at the dollar, which is plunging right now, which is also great for risk on assets like stocks, cryptocurrency, stuff like that. As this breaks down, this is inversely proportional to stocks. But just keep in mind that the dollar has been going down for 5 months in a row. And I actually made a post about this on X, right? Follow me on EddieLux_ on X if you haven't already. Details in the detail section below, right? See how we've broken below the 100-month moving average, right? This was support earlier, so this might actually come down a little bit more, but because we are a bit oversold in terms of like it's very rare for the dollar index to be 5 months in a row down, right? Without at least trying to find some support or pushing up temporarily before continuing, if it is to continue down lower, before continuing down lower, right? But ultimately, this is good. As if it breaks down lower, it's good for risk on assets. But again, look out for at least a short-term bounce, right? 5 months in a row down is very rare. As you can see, this goes all the way back to like 2000s, right? It's very rare for it to not at least have a short-term bounce. So, but ultimately, I am pretty optimistic about the stock market going forward, and we'll definitely update you in the next video about where I see the month of August, the stock market headed for the month of August, and so we'll see what the Fed does, right? Does CPI continue inflation? Does it continue to go down, or does it go up? Will the Fed pause rates or cut rates, right? We'll see in the next video. Thank you for watching this video. Don't forget to like this video, comment below, and subscribe for updates if you found it helpful, useful, or informative. Appreciate all your support. Thank you again, and have a great day.